Good morning, everybody, and welcome back to the Schwab YouTube coaching channel for the Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a brisk, chilly Denver, Colorado today. Pleased to be joined by my friend and fellow co-host on a Wednesday, fellow coach, Brent Moores. Good morning, Brent. How you doing?
Doing good, Kev. Good, glad to be with you. And, that's what you get for living in Colorado in late November. You kind of get brisk and chilly. Same could probably be said for Salt Lake area, too, for me.
Yeah, that's true. That is the price one pays. But, when you get deep into November and you still haven't seen any snow, you kind of get lulled into this false sense of maybe a beautiful autumn fall time frame instead of winter and snow. So not a bad to be reminded that it is the Rocky Mountain area. Yeah. Today, additionally, we're joined by Cameron May, fellow coach as well, here in the chat. Say hey to Cam. Make sure you're following the three of us on X. Cameron May, CS, Kevin Horner, CS, and Brent Moores, CS. Absolutely the best way for you to engage with us when we're not hosting classes for all of you. I know Cam's also available on LinkedIn. He made note of that in the chat as well, so make sure you're following everywhere you have an opportunity. Let's get to our disclosures so that we can just jump right on into things, everybody. Please remember that our discussion here is exclusively for your information and education. We do not make recommendations. We do not make endorsements or any specific approach to trading the market here. We will, of course, discuss technical analysis, and we do that by discussing concepts and strategies that traders might choose to employ here when they're looking at the various areas of the market. Remember, though, technical analysis should not be the sole means of your decision making. So you want to consider the market decisions maybe like a big old puzzle and then use as many of those puzzle pieces to make your decisions as possible. And then I have one other note for you all today. We do have a few events available here between now and the end of January. As you can see, we've got this advanced options opportunity coming up in Miami. If you've never been to the Miami Turnberry, that is an excellent location and absolutely beautiful. Been a couple of times in the last year. Really, really great way to further your learning, obviously, because we're talking advanced options there. But if you have a chance to come to one of these events, we really encourage you to do so. Of course, they are free. You can check out our slate of upcoming events at schwab.com/events and get registered. Got to get registered. Remember that, everybody. Okay. So, Brent, let's talk about that S&P today. Looks like a nice little gap open. We're already seeing a bit of a candle that is green, telling me that we've already traded further up than our open.
We've had a nice pullback recovery after the pullback that we had. And, we'll look at some different time frames on S&P 500 charts here, but really a lot of it is going to kind of depend on what chart you're looking at. But right now, looking fairly bullish. And, it shows, look, we broke below that 50-day moving average about a week ago. And maybe that was a little bit of a concern. Maybe that was a little bit of a buying opportunity for some people. But the market's just shown the resiliency that we've almost come to expect of late. And it's not always going to do that necessarily. But, in terms of the pullback, it was a bigger pullback than we've seen for several months. But, in fact, how big a pullback was that, Kev?
We get peak to trough, basically just shy of 6%, about 5 3/4.
So
just very basic, right?
Standard. That's pretty basic. In fact, let me diverge. Just give a little tangent here, real quick. In terms of pullbacks, this is going to be S&P 500. Since 1928, we've had at least a 5% full pullback. And the S&P 500, 95% of the time. So on average, every year approximately, we get a 5% pullback. So nothing out of the ordinary. What about a 10% pullback? Well, 10% pullback, about 64% of years, we get a 10% pullback in the market. So about every 1.5 years, roughly, these are just kind of rough numbers, you get a 10% pullback. What about a 20% pullback? About 20% of years, about 27% of years, we get a 20% pullback in the market. So about every 4 years or so. So I guess the point is, this pullback that we've had was not like atypical by any means. You don't get it every couple months or anything, but it occurs most years. You get something like that. You get that, and so hey, there we go, and we've promptly recovered. We're back above the 50. We're back above the 20, and we'll see from there. Kind of this head and shoulders pattern though on the 1 year chart. If you go up, you got a one shoulder there. Yep, you got it. And then we're kind of right at that area. That's the head right in the middle there.
Yep.
And so we'll see if we're kind of, I think, in this the jury's still out area of, are we going to break above that right shoulder there? But if we do, that'd be a little bit more of a, well, it would take out the scenario of this head and shoulders being a reversal pattern if we continue up above where we're at.
It would. We would look for, it would basically eliminate or kill the total head and shoulder pattern if we could keep making new highs,
Yes.
here, right? If we could,
Yes.
if we traded, I mean, obviously at this point, Brent, we're really tightly splitting hairs, aren't we? I mean, because when we look at the action of the last few months here, really all we've done is go mostly sideways. And if I drew a downtrend line to catch this peak, we haven't broken that just yet. But honestly, I mean, this looks like a level that tells us we've got excellent support at the 65.40 area or 65.30. And we can make some decisions about bullishness or bearishness based on a move through the downtrend line, or based on a move that would give us lower lows, or maybe even matching lows. Brent, if we got back down there, held that ledge once more, shouldn't bulls be encouraged to at least make an effort to step in there?
These are support levels. These are resistance levels. And so if we were to go back down there and we bounce off it, it's just further confirmation that that's a support level. Now, they break occasionally, they're not solid stone, they can break. Same thing with the resistance. A break above, on the other hand, a break above that trend line down that you drew would be kind of a bullish signal for us there, a breakout signal.
So, Brent, I'm also reminded, as we often think about these things, yes, technicians pay attention to the levels. They make their decisions based on price action through those important levels. But Brent, there's a couple of key things that I think are important for traders to remember. Number one, when you're looking at that area of support, something I mention all the time, matching lows are cool, lower lows are not, right? And it's difficult to maybe validate that when you're looking at the daily chart. But if we looked at the S&P here on a weekly chart, this is going to give us maybe a better visual. Yeah, that candle on last week wasn't ideal, but notice the tail took us through the green 20-week moving average, but we held it at the close. So we have an indication that throughout the week we were lower, but finished above it. Just standard technical analysis stuff there, everybody. And now this week, we've already managed to trade above the high of last week, which is also notable, Brent, because last week, if it is in fact the low in that very brief 4-week pullback, well then the first thing we have to do to reassert the uptrend is maintain a level above the high of that low week in this chart. Very important, but still very standard and basic technical analysis stuff, Brent. We're not getting very cute here.
Correct. Kind of a hold on a week. I don't know if you call it a hold on a week because it's closed above the high of the low week, I guess. But that's kind of a way that people look for bounces. And looks like kind of this pattern is showing a bounce here on this. This is a flag is another way to think of it. We had this long flag pull. We had this 3-4 week pullback and continuing up. So that's a bullish, I mean, for what it's worth, this past pattern is showing a bullish sign on this, and so I don't know what to say on that. The longer term has been very bullish on this. I don't see any change on that right now.
Yeah, I tend to agree. And I want to answer a question here. I realize my chart's a little squirrely. There's a question in the queue here from Cola regarding the 50-day simple moving average as it relates to the S&P at least. And the question is, there's been a bit more focus of late on the 50-day simple moving average. Can you elaborate a little bit? Well, ultimately, I think what it comes down to, Brent, is that if we were, and don't forget, we use a 20, a 50, a 200-day moving average, orange, purple, blue, respectively, very consistently. But what I often say from a technician standpoint is, pay attention to the moving average that appears to be most important to the existing trend. For a lot of our window in here, we have been working with either the 20-day or the 50-day. Now, if you're talking about trading around those two major moving averages simply because both have been held for various periods over the last 6-7 months or so, well, then one way to think about it, if I put those back up for you, if you're watching the 20-day, a close or two in a row below the 20 can be a reason that a trader would lighten up their, in this instance, the SPX position they may be holding. A close below the 20 could mean more selling. In the majority of the pullbacks, Brent, in the last 6-7 months, though, that's not been the case. Pullbacks to the 20 have been opportunities. But traders, we have to know how we are going to approach that. Do we believe in the trend? What is going to be the signal that gets me to believe in the trend that allows me to either stay long the entirety of my trade or add back shares I took off because I got a little nervous under the 20-day? And then further, Brent, if it breaks the 50-day, as we did finally up here for the first time all the way back to May 1, well, that became a signal for some traders as well. So it's all tied to validation of the trend. What trend is the trader individually monitoring, and what steps are they going to take if things start to shift? And up until today, Brent, the last 2 weeks have been very unclear about the ability for the trend to maintain.
Yeah, and so the 50-day is the kind of the next level. We hadn't been really testing the 50-day even that much until lately, until we broke it. And
yeah,
it's something we've looked at for ever since I've been on this webcast with you, to be honest.
Yeah.
I think the 20 and the 50-day, but it hasn't been as relevant before because the price action wasn't near the 50-day before. Now we're near the 50-day. That's why we're focusing on that a little bit more now.
I think so, as much as anything else. I think that's an excellent point. We try to respect what the instrument is respecting because the traders that trade that particular instrument are watching the same things, right? They're
yes, and
the same
just
stuff.
To add to that, the 200-day we don't focus on that much right now because, frankly, we're not even near the 200-day. But if we do drop down there, that would definitely go into focus.
It sure would. And that would be a significant development, yes. Brent, we should also take a peek at our NASDAQ 100 here. As you can see, I'm going to lift this downtrend line that I drew in. But if I zoom into things here, once more, we had matching lows, a day where we traded intraday through the support level, but closed above it. Kind of one of those indecision days. And then we've gotten strong again. Now, interesting spot to which we rallied, Brent. The high we made on this huge candle day last Friday. Let's see. This is Wednesday, Tuesday. So last Thursday, the big reversal day. The high there was 25,222, almost 223. And today's high is 25,209. So we've missed it a little bit. But Brent, if I put a line at those essentially at those levels, sure looks like a pretty important level to get through, doesn't it?
Yeah, and we'll just have to wait and see. It's interesting because we have a kind of this shortened weekend here with the holiday and whatnot. So the price action, we may have some lower volumes as the day progresses than we would normally expect with the holiday tomorrow, and then Friday is a shortened market day. So we'll see on that. But right now, kind of this level where we'll probably just have to wait to see the end of the day. We may be above that by the end of the day. Maybe we're bouncing well below where we're at right now, but right now we're kind of just right there.
Yes, we are. We are above the 20-day. You can barely see today's candle because it is so small, but it was a nice gap to the upside.
Yeah.
Thus far, our low of the day is basically on the 20-day, and our high of the day is this potential resistance. I'm going to color that red so we can validate it as such until we get through it. in the hopes that we just get right back on pattern there. So that's what we're looking at on the NDX. The other thing that I'm always reminded of, Brent, is when we're up here, we traders say things like, man, if I could just get that pullback, I would really like to deploy some new money. And then when we get that pullback and we're sitting down here near that bottom, by the way, almost 8.75% lower from a peak to trough move in the NDX. This was obviously, in hindsight, an excellent chance to add some money. But Brent, it's not so easy in the moment, is it? Right? They often say, as is often stated, when you need to be a buyer, you're not going to be comfortable being a buyer. And sometimes that just means, Brent, we take smaller positions, we try to participate, but if we take smaller positions than is the standard for us, we don't overextend ourselves and we don't put ourselves more risky than we would prefer.
It is tough, Kevin. No, there's no doubt. So in hindsight, sure. Yeah, it's real easy. If you have kind of a longer term, that's why you plan ahead, first of all. And that's why it's one reason why it's kind of nice to have some extra capital on the sideline. If, there's times when you hear, oh, the market's getting frothy. Well, maybe if you have a little cash on the sideline, when you get to lower levels, it's a little easier to deploy that cash. I'm not saying it's easy at any time necessarily. But, you see it coming down, and then maybe there's key levels where you say, hey, once I break above this certain level, then, then I'm going to actually deploy that cash there on that. And you can see that reflected in that RSI at the bottom of the screen. We had this nice kind of downtrend in that RSI, break above it, back above the 50-day on that RSI as well. That's a relatively strong reversal above where the lows are we saw in August and September on the RSI as well. If you want to look at it's not the RSI and any other indicator is not the same as looking at the price action itself, but it can be a help for some traders.
Yeah, I think a lot of traders lean into the RSI from a confirmation standpoint as much as anything else. Certainly not much in technical analysis is predictive in nature. We know that. We just use it for the majority of the time to set our levels, manage our own risk, etc. So a couple of other questions in the queue here. I see from K Brown asking about how long it takes the 200-day to catch up to the 50-day. Well, guess that would take a while, as it turns out. You would likely need a lot of consolidation, a ton of sideways motion, right, where you're not making new highs, because price on the 200-day is 4 times less important, if you will, relative to the 50-day, right? Because you're incorporating 50 closes versus 200 closes. So you'd need price action to really go sideways for a very lengthy period for a 200-day moving average to catch up to what we've seen of late. That's one thing I wanted to address. And then, Brent, when you're thinking about the look here in the NASDAQ 100, it's very much similar to the S&P.
Yes.
And we talked about that potential visual that could be head and shouldery. And the same could be said here about the NDX. But can you speak to what would invalidate such a move as I draw those levels in here for you?
Well, when you have the head and shoulders pattern, and once you've established the right shoulder, left shoulder, and the head, it's either going to break eventually, either going to break below the bottom support level there, the bottom neckline, or above the right shoulder. And if it breaks above, then that head and shoulders kind of just didn't completely develop, because look, this head and shoulders, this is a traditional head and shoulders, is a reversal pattern. It's a bearish reversal pattern. After the market goes up, has been going up, which is what we saw, and you see that, then if we break below the neckline below there, then you can potentially draw targets or things like that, projected moves on that. But if we break above that, then it kind of invalidates it once again, when it looks like we're going to be resuming, if we do break above it, resuming an uptrend. And the same thing, by the way, is true on a inverted head and shoulder. It's just instead of a bearish reversal pattern, it's a bullish reversal pattern, but you can still negate it the same way.
So great reminder that we always refer to these as potential patterns until they play out, right? And once they play out, well, then we can start ascertaining the potential move thereafter. And one way for consideration here, if this is a legitimate head and shoulder top, we would just measure the height of the range, the peak or the head basically to the neckline. And then we'll take that same line. And if it were to break down through here, this would become an approximation for a target for bearishness, if you will. So a lot of traders would say, Brent, okay, if we're going to break the head and shoulder top, we're certainly going to see the 200-day moving average. That would be their first expectation. Maybe not an expectation that it trades through it, but many traders would think that if we get to the 200-day, that becomes a spot where selling would at least abate for a moment in time and maybe give traders on the short side a reason to cover their short side trades. You know, that becomes a spot. But that's just one way to think about it. Obviously, in this instance, we haven't had that breakdown yet. We're building that right shoulder, but it's a very important level for both the NASDAQ and the S&P 500.
It is. And even if you don't worry about the whole price pattern itself, think of it as resistance levels, and you can see why it becomes a significant thing.
Yep, exactly. And as I move over to the Russell 2000, we're going to look at small caps. I'll just remind you, I do those measured move calculations. Those are simply just approximations, everybody. We are never of the belief that those are going to play out perfectly. That is never, I mean, it's the market, what plays out perfectly. So I'm just constantly reminded that we do those as a way of trying to set target levels, but getting there is never a foregone conclusion. Brent, this is I was speaking about this late yesterday, the impressive move we've seen in the Russell. Yes. Now, granted, a lot of this is tied to the back and forth on the rate change expectation for December 10, and we've been all over the map. We're going to look at it momentarily, but what a significant bounce back here in the small caps.
Excuse me. Yes, more significant than the other major indices there, but and up again another half point today here, up above the 20, up above the 50, and not really the same pattern that we saw on the S&P or the NASDAQ. And so this is, I think it's probably tied to rates partially, and if we don't get the rate cut, I expect we'd have a little bit of a sell-off probably on the RUT here on this. I don't know for sure on that, but it seems to be expecting that at this point. But of the three major indices, the two being large cap indices and this being a small cap, this is the one that tends to play a little differently than the other two. The S&P 500 and the NASDAQ tend to kind of just do the same thing, except to a larger extent in the case of the NASDAQ typically than the S&P 500. The Russell, a little less of a correlation there to the others.
Yeah, I would agree. A little less correlation and certainly far more intrigue as it relates to the rate change expectations and even the conversation around it, Brent, because we haven't had any, I mean, we had a report from jobs last Friday that changed things. In fact, let's bring this up so we can peer at it real quickly. The level now on this, again, this third-party CME Fed tool, everybody, not a Schwab page. And again, this is how traders are positioning, not guarantee of what's going to happen as we move into December 10. But Brent, very big shift from last time we spoke Wednesday. 30% a week ago. Today, it's at 83%.
Yeah, just so for everybody looking at this graph there, if you look at the bottom where there's that kind of table down there at the bottom, look at the 1 week under where Kevin's pointing, 30% chance of a rate cut a week ago, and now that's shifted to about 83%. Now, that's not a guarantee, but that's just kind of showing the market sentiment on that. What changed? What changed is these Fed members in like press conferences and interviews starting to say, oh, I think a rate cut is appropriate. And that's really the biggest thing that I've seen that has moved when they have spoken. That's what the market listened to more than I think any just single data point, economic
Yeah.
data point there. And so people are going, well, because people kind of try and read between the lines what people are saying. Well, they were pretty explicit in what they said, to be honest. And so that's what is shifting the idea of the market. So maybe a little bit less of a concern with inflation, a little bit more of a concern with just economic strength, labor, that sort of stuff may be driving it.
Yeah, absolutely true, Brent. There was a bit of a shift, last Friday, like I said, the jobs number started to maybe change some of the narrative around it. And then, like you called out, the next couple of days, Monday, Tuesday, we've heard more conversation from those Fed governors, and it's had a pretty significant impact on things. And I'd also point out, we looked at it a week ago, 30% likelihood of a cut. Where were we 5 days ago? Right here at the bottom, everybody. And then now it's a week later, we're at 83% likelihood. And where are we in price? We're up 170 points on the index. So clear. And then in the 3 weeks between that, when we were at 90% likelihood versus 30%, we got this drawdown. So yeah, is there a correlation? Yes, absolutely. Very interest rate sensitive group here in the Russell 2000. Okay, Brent, the other interesting thing that I've noted of late is also tied to interest rates. And I wanted to bring up the home builders because I thought that the pattern on the home builder index here was pretty notable. So I'm bringing up this utilizing the Dow Jones US Home Construction Index. And I'm also doing this briefly just to point this out, everybody. $DWC is your starting spot for these. If you wanted to see what other indices are out there for you, you can utilize the lookup tool here. This is very simple. Just start out with $DWC, and you're going to be provided all of the available indices to check out. I mean, these are going to give you a lot more clarity. So think about this from a standpoint of locating your industry groups and sub-industry groups, and see where you can gain some leadership, everyone. So you might consider some of these symbols to help provide some of that clarity for you. But I definitely wanted to bring that up. Now, Brent, what I'm looking at here, look at all my ovals. I've got a ton of stuff drawn in, most of which is tied to just standard support and resistance, utilizing the 20-period simple moving average, in this case, the 20-day. Support for the group on the way up, resistance for the group on the way down, and here we are, trading through the 20-day to the upside, Brent. We're back at what was the neckline of a head and shoulder top breakdown. So, Brent, we've seen now a head and shoulder top that broke down, met the measured move level, and has now bounced back and reversing.
Yeah, and those areas that you highlighted, yes, there's support and resistance levels, but they're also a way of kind of looking at the trend. As they're going up, we're seeing higher lows. As they're going down, we're seeing lower highs. Well, we're breaking that lower high. Does that mean the trend has changed? Well, it kind of seems that the downward trend is broken. I'm not sure I'd call it an upward trend yet, but we're kind of on that. And of course, a key level would be we're going to need to get above potential resistance level, which is what we've spoken about before today, but before on the other indexes that we were looking at there. But yeah, again, a key level today, not much is going on this, but to be honest, Kevin, it wouldn't surprise me, just kind of going back to the whole holiday week thing, if we have a little less volatility. Who knows, the market may prove me totally wrong here as I say this, but it certainly wouldn't surprise me if we don't have much volatility through the rest of this week and then start with a bang on Monday perhaps, but who knows. But we're kind of at this critical junction here right now on this, and so we'll see how we end up the day.
Yeah, we will. I'm also reminded, though, Brent, sometimes that lighter volume leads to more volatility simply because there's less volume to cease the rallies. If there's rallies or sell-offs, if there's a move through a level, one direction or the other, it can be kind of exponential simply because there's not as much participation and balance. So they can go both ways sometimes. So we got to bear that in mind as well.
Yeah, that's true.
Okay, so I wanted to touch on home builders, like I said, relative to the interest rate situation. In fact, let's talk about the yields. Let's just pop in here to the TNX which has, I had drawn in another potential head and shoulder inverted head and shoulder here, but we just came back and made another test of that same level down there, just at 4% yesterday, and are bouncing off of that. So yields are rallying a little bit here this morning.
Yeah, we look at these a lot. Pay attention to the general trend on yields would be my take, and that's there's a lot of noise here. They go up, they go down. We can kind of look at causes of them going up and down, but the general trend is we've had this lowering of yields. This is the 10-year down to close to the 4% level, and so that is. It's been helpful for the market. Hasn't always translated everything, but we are seeing lower mortgage rate. Our mortgage rates are off the highs, and so that's the interesting thing is, and we don't have a chart for this necessarily, but if you look at the number of houses, buyers versus sellers in the housing market right now. There's a lot more sellers than buyers. We haven't seen that necessarily. Real estate's always regional. We really haven't seen that lower housing prices yet to this point here, but that's kind of what's going on in the housing market, the residential housing market, and of course that is tied to mortgage rates, which are tied as well to the longer term yields that we're looking at right here.
Yeah, very, very true. So we have to know at least the relationship of yields and to these other groups. So that's very important. One of the other areas, that I think we need to hit on here, we got to look at semis, and then we're going to take a peek at what's happening in the sector moves here. We had some requests in the chat this morning, but the semiconductors are trying to get outside of that pullback channel. Brent got above the 50-day today, rallied into that same kind of band of resistance. We've been pushed back from this level. This is a very important level. This is basically the same level that we've seen on the S&P, on the NASDAQ, on the SOX. This area that basically rallied into the same ledge we had used as resistance before. And that's, again, it feels nice that we've bounced off of the level we have, but if we can't kick the trend to the upside further, then this is going to present like a rejection at an area that could be considered resistance, Brent.
Yeah, and this is an important group here because there's times when this leads the market significantly, and right now they've actually been lagging a little bit. I mean, it's been struggling a little bit, semis, but through much of the year, semis is really what have really driven the market up. And so if we were to get a strong move up above our resistance level on semis, above that 20-day, that could really help boost the market. Right now, the market's actually been kind of looking at some leadership in some other areas as well. But this is a key level right at that 20-day. And something else I would point out on this is we're not very far away from that a 2050 cross on this in terms of the moving average. So we'll see if that happens. If we continue up from here, we may never see that. I don't know. But if we kind of sit around this level, we'll probably see that 2050 cross, which some traders use as kind of would consider to be a bearish technical signal on that.
Yeah, potential for a trend shift in that 20 to 50-day window of time, essentially, right? That 4 to 10 weeks. And that just might mean a bit more choppiness over the coming weeks. It might mean maybe a deeper pullback than the one we got here, where we came back to 6,200. Maybe we got to come back and test 58.5, which was former horizontal resistance. By the time, if and when we got there, Brent, wouldn't be terribly surprised to see the 200-day catching up to that ledge as well. So there could be some confluence of price at that 5,800 there. That could be important too. So we've got to keep an eye on all of it. When we start making these ideas or theses about what may play out, obviously, if you have 4 or 5 different theses about what could happen. Only one of them is going to likely come to pass. But by thinking about them, by having those levels laid out, knowing what steps you might take with your positions based on those moves could be very, very important. So always a good idea to at least make some plans about how you think the market might act going forward and what steps you might take if it comes to pass. And I always like to remind you, think about the most uncomfortable ones, the ones that you don't think are likely to happen, that would hurt you the most given your existing positions. That was a good one to consider, because those are the levels that you need to know about. We never want to be surprised on big downside moves. That can be very difficult to sustain, right, Brent?
Yeah. Let me just add a couple things. One,
please.
You look at different support levels, and the question kind of begs the question: which one's the right one? There is no right one. It's the next one up. If we break one, then we look at the next one, and then if we break that, maybe we're looking at a moving average or something. It's just not that exact that we don't know. They're just all potential places of turnarounds, and it may not even turn around at one of the major ones either. There are also, I was about to address something in the chat that Rachel, I think, just hit up, and that's the SOX. Someone was asking if the SOX is market cap weighted, and there's kind of a sort of is the answer on that, because yes, it is, but it doesn't. I think it has a thing that keeps it from being completely dominated by one or two players out there. So I don't know the details on that. In fact, I think that was probably Rachel in the chat who put that in there. That gives some of the quantitative numbers on how that is sort of semi-market cap weighted there, that SOX index there. So anyway.
Excellent stuff. Thank you, Brent. One of the other areas, I had a request in here in the chat that I tried to get to for you here, Jay. As you know, of course, we can't very well. Oh, actually, it was Nathan, excuse me, asking about biotech. And so, of course, we've been talking a lot about healthcare. But as I mentioned a moment ago, keeping an eye on healthcare, don't forget to check out your industry groups. And if you want to see biotech, that's just DWC BTC, excuse me, for biotech, which is what you're essentially requesting that we can't really hit on with your exchange traded funds in this class. We want to maintain our ability to archive, of course. And if you look at what's going on with biotech, Brent, one of the things that I've been trying to think of, that I've been kind of taking note of, is not only has the sector been moving to the upside, but biotech has been leading, even more so maybe even than pharma of late. And I'm just wondering, as we move into a group that is commonly thought of as a little bit defensive in nature, are traders maybe more confident or more willing to take on risk, hence the movement in biotech? Because biotech, by and large, is a very risky group from the standpoint of volatility, generally speaking. There's a lot of risk associated with companies that are, developing, and research and development can be costly, and frequently you're getting headlines telling us that what we were developing is not going to work, and now we got to move on, and it's all been built up on price in advance of that, Brett. So what are your thoughts when you're seeing something like this in biotech?
Well, from a pure technical standpoint, it's hard to imagine a stronger trend than what we've had. Biotech is part, obviously, of healthcare. Healthcare has been the top performing sector over the last month of all the sectors there. And you can see that. You could probably look at the relative strength 21-day. I imagine that'll probably pop out on top, I would guess, in terms of healthcare. A load here for us.
It takes a minute to get it going, but yeah.
There it is. I'm expecting that will probably be the top one there. But yeah, so I mean, but the thing with biotech is it tends to be less correlated than a lot of healthcare, but more volatile, definitely. And so, it's just been really strong, and there's been a lot of headlines, and not always positive. In fact, the other day we had, I think it was Novo Nordisk, had a clinical trial on determining whether those semaglutides, Wegovy and Mounjaro, those type medications would help with Alzheimer's. And the answer was no, but that's not a U.S. company, so it's not going to be in this index, in this U.S. biotech index. So I think you would have seen more of a negative result on that. But yeah, U.S. biotech's going strong right now.
It's not alone. I said that it looked like it was outperforming even pharma, but here's a look at the pharma. This is pharmaceuticals and biotech. If you put those two together, wow, what a monster move. I mean, from just our lows in May, you're looking at a group collectively up more than nearly 40%, which is really tough to do, Brent, in a group of this size. So that's an impressive development, I would suggest.
Yeah, absolutely. So, I mean, and it'll come to an end at some point. They always do at some point. I have no idea when that will be, though. I mean, look at that chart right there. That's crazy.
That is vertical, sir. I mean, you don't get too many charts that highlight that. That is a very significant pharma move. Okay. So hopefully, we've given a little bit of teaching moment there as it relates to the Dow Jones indices available from an industry group standpoint. Brent, let's hit on some of these stocks in the news. NVIDIA had been in the midst of a pullback, and then largely a little bit of this pullback of late has been tied to some positive news out of Alphabet. Alphabet debuting the AI, and in doing so, it kind of resulted in a little bit of a drawdown in NVIDIA. Now, NVIDIA has come out and said something along the lines of, hey, we're really proud of Alphabet. That's great. We need that in the overall grand scheme of things for AI development. But when you look at this, Brent, once more, people tend to say things like, man, I really wanted to get into NVIDIA when it pulled back. And then they don't because they get nervous, right? Well, NVIDIA did pull back. It is down a bit from that peak. At the lows, it sold down 20%, Brent. And that's crazy. That doesn't look like a 20% move, but that's essentially what happened here.
Well, NVIDIA does move a lot. And, it seems unlikely that NVIDIA is going away anytime soon. But yeah, they may face some more competition. And that, just I guess yesterday, I think the news was that Meta may be buying this AI chip technology from Google or Alphabet now instead of NVIDIA, which didn't help necessarily. But that is, it's a dynamic space, and there's more than just NVIDIA, but NVIDIA has been the clear leader and the clear driver in the space as well, and it's the largest company in the world, NVIDIA.
Yeah.
And so it has the biggest weighting in any of the market cap weighted indexes. And so some of the underperformance of NVIDIA has had, going back to kind of what I was mentioning before, of how we've kind of had maybe semiconductors haven't been leading as much lately in the market. Well, if NVIDIA were to recover and change, then maybe it could kind of resume its leadership role there in terms of driving the market up. But right now, it hasn't been.
Yeah, not quite just yet. But if you look at that candle created yesterday, some traders are going to tell you that's a nice bullish hammer at an area of potential support. And you've traded through the high of yesterday. So if yesterday is the low day in this drawdown, getting to almost 20% pullback, that becomes a potential spot where some traders would look to expose some new funds. The other one to look at here briefly was Tesla, Brent, and I've already drawn it all in. Nice uptrending level from a technical viewpoint, but boy, looking like we may have met resistance right here. The reason I'm bringing it up is because this, of course, was some discussion in the last couple of days out of Mr. Musk talking about the robo-taxi fleet doubling in the next month here, is what he posted on X. And the fleet in Austin should roughly double in the next month specifically. So he's expecting a lot more coming from the robo-taxi side of things.
Yeah, and obviously the market has seen a little encouragement lately on that, and probably a significant area of resistance. We have a 20, we have a 50, we have recent highs, recent lows that we can look to potentially break above. Yeah, I mean, we'll just have to see where Tesla goes. And again, we may have a little less trading through the rest of the week here, given the shortened week.
Yeah, the short week can definitely have an impact on things. Like we said, obviously few lighter volume in a lot of cases, but not necessarily smaller moves. And so thought we could. Here's one that I have to touch on real briefly. We'll wrap it with this one, everybody. Zscaler made the news today. Zscaler actually got an upgrade at Capital One. And the reason I wanted to look at it is because they got upgraded, but they are dropping like a stone here. 12% move to the downside, upgraded at Capital One to overweight from equal weight, target at 320. But yuck, what a move.
Yeah, the market's not loving it, and I have a friend who's had some Zscaler issues there. So, but the earnings seems to be driving the move down. And hey, kudos to whoever's upgrading. I guess they waited for the after the earnings. Maybe it's a buying opportunity. Who knows?
But everything is potentially an opportunity. I'm always intrigued, though, when you're an analyst that gives steps out into the realm of downgrades or upgrades in this case after an earnings report, no less, and the stock is off 12%. It doesn't exactly leave you feeling really good about your efforts, I don't think. But an interesting spot because hey, this thing peaked back in the February of 2024 at this level, so potentially. Maybe that is the spot where bulls are going to put a foot in the sand and see if they can't hold up in here. Interesting spot for Zscaler and a big move. And then, I'm always inclined to do this. I know I'm at time, everybody, but I got to see, is that right at 50% just about? So interesting. Yep. Interesting. All right, we're going to wrap it there. Brent, always love having you on a Wednesday, man. Thanks for being here and sharing your insights as always. Now, we do have more on the day for you all today. Big thanks to both Cameron and Rachel Dash, who did make it in there. Thanks, Rach. Make sure you're following us all on X, and make sure you're subscribed to the channel. Didn't see a survey today, everybody, but you can hit that thumbs up button down below for us. We're going to get this one reviewed and in the archive a little later today as well. So hope you all have a fantastic rest of your Wednesday, a wonderful Thanksgiving and day off tomorrow, everyone. Let's reconvene on Friday. We'll be back with Trader Talk in today's market. I'll be with James Boyd, and we're doing ETFs. Now, that one, again, live only session, no archive. So have a great rest of your week. We'll see you again real soon.